It is Money Calendar Monday. So when I look at the money calendar for the week, this is what I see first and foremost, the weekly outlook. When I look at the weekly outlook, I'm looking at what does the pattern show me for overall stocks that we're following, overall stocks that have a tendency to go higher or lower going forward. And for the week of May 4th to May 8th, the majority of these stocks are bullish. Take a look at what we see here for today, the 4th. I've got 25 ETFs, 21 of them are bullish, 4 are bearish. And you know what's funny? The 4 that are bearish, the majority of them, they go down when the market goes up. So that to me is even more of a potential spring breakout session for stocks, right? Not just ETFs, but stocks. So I'm looking in that 40 to 60 day time frame. And when we look towards the end of the week, tomorrow, 80-20, Wednesday, 77-23, Thursday, 80-20, Friday, 79-21, still in the ETF time frame. And we look at all the major ETFs, we see the majority of them are showing a lot of bullishness. When we look at these time frames, these 40 to 60 day time frames, we scan for these viable patterns. Now, there's still some headline volatility out there, and that means there's some risk. So we're looking to still play it safe with the time frames that we see here. All right. Now, I got to give a nod again to a couple of the ETFs. We talked about QQQ in the last several weeks, one of the most popular ETFs out there. And for those who don't know, the Qs trade the NASDAQ 100 index. This is 100 of the largest non-financial companies that are listed on NASDAQ. Big names like Apple, which we just discussed, Microsoft, NVIDIA, Amazon, and others. The other index we've been talking a lot about recently is SPY. Now, SPY is the Spider Trust. That is really the most widely exchange-traded fund in the world. It's very liquid, extremely popular, and widely used as the U.S. benchmark. Now, investors use the SPY to gauge how the overall stock market's doing, and it's designed to mirror the performance of the S&P 500, right? This is 500 of the largest U.S. companies. And again, I'm talking about companies like Apple, like Microsoft, like Amazon. But today, I want to do a deep dive, not on SPY, all right, which is down here at the bottom. Great patterns, by the way, that we see, 9 of the last 10 years, it's ran up in the months we're currently in. QQQ, 9 of the last 10 years. We see an average 10% move that happens through the majority of between now and well into summer. But the one I want to talk about today for our education is one that maybe not a lot of you know about, and that is SVXY. All right. So the question you should be asking if you don't know this is, well, what's SVXY? SVXY is the ProShares short-term VIX. All right. It's the VIX futures ETF. It's an ETF that's designed to move opposite of short-term VIX or VIX futures. So when you hear about the VIX, most of us know the VIX is a volatility index, and VIX is high. That means the markets are moving lower. When the VIX is low, it means typically the markets are moving higher. Well, SVXY is opposite of the VIX. So think of it this way. SVXY moves with the markets. It moves up when the markets are bullish. It moves down when the markets are bearish. And so it tends to rise and fall with the markets themselves. So it trades the opposite of the VIX itself. Now, let's take a look at a chart of this. And more importantly, let's take a look at the seasonality first. The seasonality is actually fantastic. When you look at what SVXY has done in the past 10 years, and there's no guarantee it's going to do it again this year, but when we look at what it's done in the last 10 years, this is what I look at between now and end of July, all right, through July. We saw the last 10 years where SVXY has actually moved higher. And it's moved higher an average of just under 15%. That's a pretty bold move. But take a look and see what I'm talking about here. The best in the last 10 years. that SVXY has moved was 29.74%. That was in 2023. And remember, what happened in 2023? We had that kick off of the 2022 bear market, and the NASDAQ and tech stocks really led the way. But if you take a look at every other year was positive as well. The worst that SVXY did in the last 10 years was a 5.5% move that happened back in 2020. So that's the seasonality of it. And again, there's no guarantee it's going to happen again this year. But if you're a pattern trader like I am, and you like to discover repeatable patterns, this is definitely one worth considering. Now, take a look at a chart of SVXY. I'm going to blow this one up because when you take a look at this chart, I took this all the way back into October of last year. So you take a look at October of last year, and we're talking about SVXY moving between, say, the low 50s and the mid 40s, back up to the low 50s, back down the mid 40s by Thanksgiving. Then we had that run. Remember, we had the run with the S&P, we had the run with QQQ, and SVXY ran with it. Topped out here right around January, and then we had the pullback, that double-digit pullback that happened in the overall markets. Well, it happened in SVXY as well when it went from above 55 down to the low 40s. So, count that off with me here. That is really about when you go from 55 down to 42.5, that's a 12.5 point move on a $55 instrument. We're talking about a 20% move to the downside. Since then, however, in just the last month, we've seen a reversion to the markets. We've seen a reversion to volatility, and we've seen a reversion or a bounce in SVXY going from 42.50 back up to the low 50s. Now we're entering that seasonal bullish pattern, okay, where as seasonal traders, we look for a projection on time, but we also look for a projection on price. And if the projection on price is correct, we should see a breakout to new year-to-date highs on SVXY.